Welcome to the channel. My name is Mike. This is Health and Wealth. Thank you for joining today. We're going to be talking about NVDY, CONY, MSTY. We're going to be talking about Coinbase. We're going to be talking about Nvidia. We're going to be talking about MicroStrategy, also known as Strategy. We're going to talk about YieldMax's strategy, their calls, their synthetics. I've got all of the screenshots color coded here coming up for you to take a look at what to look for this week with these. I've also gone ahead and taken a look at the options. So if you were to do this on your own, how much money would you have to put down, and how much money would you expect to get by doing this on your own? Now, for me, if you're new to the channel, my name is Mike. This is Health and Wealth, by the way. I'm an income investor. I'm looking to make it easy. I'm looking to put a chunk of money out there and let somebody do all the work for me. So far, so good. I've been trusting in the YieldMax process. There's a few not so good funds. There's a few pretty darn good funds. I'm kind of invested in the middle there. So I'm invested in MSTY, CONY. There's the middle, and then NVDY, which has been good too. So I've been doing this since March of 2023. So just over 2 years now so far. It's been going well, that's for sure. But there's definitely been some highs, and there's been some real lows as well with some of their funds. These three right here are doing ballpark okay, right? MSTY's doing amazing. CONY has paid out a ton of income. It's paid back their investors in full already, but the share price is dipping. And then NVDY, it's been awesome for me so far. It's been really, really good too. None of this is meant to be advice for you. None of this is meant for you to take this information and solely go and buy because of this video right here. You're going to want to go ahead and do a lot of your own research. You want to know your risks. If the market tanks or crashes, what's going to happen to these ETFs? Well, the price is going to drop dramatically. The world's going to end. Our hair is going to catch on fire. By the way, I need a haircut. I know. I'm working on it. We're going to make it happen this week. But yeah, it's not advice. One time I followed a YouTuber and it led me down the wrong path. I do not want to be that person. I'm just showing you what they do and showing you that, what kind of money they're bringing in from it. I think it's gonna be pretty interesting. So, I do follow Retire on Dividends. It's very similar to his. If you want to get a even more detailed, in-depth version of what I'm about to do, he does a daily video on his channel. Go take a look at his channel, subscribe. Really good guy, and it's similar to what I'm doing. I'm just going to put a little twist on it here and talk about what if you did it on your own, okay? So bear with me here. I've got the screenshots open. I'm going to go ahead and get those down here. There we go. So first one we're going to take a look at is NVIDIA. So I'm actually an investor in NVIDIA here. I like it. It's been really good to me so far. Can't go wrong with it. My average price is $112. I don't have a ton of shares. I did have 26, but I sold 16 of them to pay off all my debt. So now I've got 10, right? So it's not like a massive hold or anything. Man, do I ever wish I had backed up the truck whenever it was at $88. But you know, uh looking backwards is not always the best thing to do. So I'm happy with what I have, that's for sure. We're also going to take a look at NVDY. It's trading at $16.19. Coinbase, CONY, MSTY, and MSTR in this video. First one we're going to take a look at is NVDY and its weekly calls, as well as the synthetic. So I'm going to bring that up here. I've color coded it for your viewing pleasure. Green is good, red is bad. So I'll zoom into it just a little bit here so you can see it, and we'll take a look at it together. There's a lot of stuff on here you don't really necessarily need to look at. By the way, I found this on YieldMax's website. If you scroll down and find all holdings, you can download this. It's white. It's not color coded. You have to decipher the code yourself. Yeah, let's go through it. So first one here, green good. This is their synthetic options. Both of them are ending on July 18th. So we got a month and I don't know what's the math on that. A month and 9 days to go. That's not trading days, by the way. That's full calendar days. So a long ways to go, right? So we got 120. We also have 130 synthetic option, and then down below, that's the puts. Down below is the calls. And so basically what this means is that whenever the price of NVIDIA was at 120, that's when they created the synthetic, and same with the 130. Anytime the price of NVIDIA is over top of this price here, that's good news for us. That's money potentially in our pockets. Now, we got to kind of wait for those dates. They can choose to close those if they wanted to early, but you probably wouldn't rake in as much money as if you waited and had some time decay there. But so what was it? 120 and 130. So we're well above that right now. We're at 142. So that's looking really good for our back pocket. But still long ways to go before that happens. A lot of things in the world can happen. You guys know what I'm talking about. Next up is all the United States Treasury stuff. This is where YieldMax parks some cash, and when they park the cash, so they get paid interest for this. Usually, this is long term. They plan on this being in here for a long time. So you can see June, August, November sitting in there. They also have July, October, January of next year. This thing, I don't actually really know what this thing is. Maybe one day I'll figure it out. It's not super important to my life though, but we're looking at is that December 1st, 2031 on that? So yeah, they're parking their money long term in there. It's kind of boring stuff in the gray here. It does make us money, but not a ton of money. The next thing I thought was interesting is this weird white line here. It looks like they have a call for it's probably a call for 152. Now, anytime it has a minus next to it, that's going to be kind of the weekly call. So this does not. It's just 3 shares. It's a strange thing here at $152.50 strike price. Not sure if that's like a printing error or what, but yeah, I'm going to move on from that. Let's talk about the green stuff here. Green is good. Here's the deal with the weeklies, okay? We want our share price of NVIDIA to be under these dollar amounts right here at the end of whenever they close these. They usually close these on Thursday afternoons. But they have till Friday to close it. I know for me with Questrade, I have to close them by 2 p.m. on Friday, or they're automatically assigned, I believe. So something to think about there. I don't know if that's the same rules for these guys in the big leagues here, but 145 is the smallest. They have 15,000 positions. It brought in this amount of money that I'm highlighting over here. What is that? How much is that? 2 million. Yeah, $2,850,000 that brought in. Now it's a little risky, right? $145 because we want our price of Nvidia to be underneath this one here. So I don't know. Let's take a look. Is it still green? It is. It's still green. So we're still $3 to go on that. But again, they usually close it on Thursday. We're kind of getting towards the end of Monday right now. It's 3:20 when I'm recording this. So we'll see how that goes for the remainder of the week. But yeah, that's the number I'm going to be paying attention to, 145. For me, I want it to stay under 145 for the week because I want to maximize the income that I'm about to get for the distribution. But I mean, if it goes over, then it also helps my actual shares in NVIDIA that I own. So catch 22 scenario there. The other one, 146, you can see the positions. It's more, way more, right? 41,687, $147, right? So they're getting higher and further away from the current price of Nvidia, which is good for us. That's why I have these highlighted in green. 23,653 shares on that, 148 and 149. So they've scattered these pretty well. All the way up from 145 to 149. Next up in red here is their credit call spread strategy. For me, I guess this is something I would like to maybe sit down with somebody and talk about how this is actually benefiting us. I know what they've said in the past is that if NVIDIA runs and goes high in share price over the week, that these will support us. But I mean, when they make it, 152 is not too bad, actually, right? It's not terrible. We're only $10 over where it could be right now. China-US talks going on as we speak. So, I mean, NVIDIA could take off. So it could probably trigger this. Could maybe trigger 155. But then as we go, they get further away from the strike price here, or further away from the price of Nvidia. So it's an interesting strategy. This does cost us money. All of this right here is plus money that's taking away from us. So not necessarily money in our pocket until I guess this gets triggered. But I would like to sit down and figure that out a little bit further. So I've gone ahead and I've recorded all of these numbers right here. They equal $10,330,000 in income this week, just from weekly calls, which is really good. Now, one thing to note is that if the underlying price is over top of 145, they're going to have to close this. They could roll it. They never really do that. But they're going to have to close that, and they would have to pay money to do that. Now, if you watch Retire on Dividend videos, you'll notice that he talks about buy to close often. You're going to see if it's ever like a buck or under, that's a good thing. That means that YieldMax people did a good job and the price of the underlying didn't go above their strike prices. Now, if you've ever watched a CONY video, CONY videos get destroyed all the time. CONY, Mr. videos get destroyed all the time. MSTY videos get destroyed all the time. CONY gets blown out of the water all the time. They're closing these for, $5, $10 per contract, and that costs a lot of money, as you can imagine, right? So yeah, we're really hoping for 145 or less this week with Nvidia. If you've caught me saying Nvidia, get over it. It's okay. You get it, right? Do you understand? All right, let's move on. Let's move on to the next one over here, which is going to be. Oh wait, actually, no. I wanted to do one more thing with Nvidia before we go. Got some screenshots here. I've gone ahead and just now recorded a couple screenshots from Questrade itself, talking about writing calls yourself. So if you were to do this by yourself, so the share price is $142. In order to write a covered call, you need 100 shares. So that works out to $14,200 to do that. And if you wrote a call down at the very bottom down here, in fact, I'm actually going to just kind of do this and bring it up here, and I'm going to get this over like this. And can I zoom in? Yeah, that's better. So let's say you said, I don't want to be too risky here. I only pull up 8 positions, right? 8 different strike prices. You can do more, obviously, if you wanted to research. But let's say I wanted to buy $14,200 worth of NVIDIA to write a covered call for 1 month, right? So this is July 11th. And at $146 strike price. If I did that, then I would collect a premium. Let's go with the low end of $4.85 per share, right? So you multiply that times 100 equals, well, hold on, let's get the calculator out here. Everybody do the math with me. $4.85 times 100. So that would bring you $485 in premium. Now, what's cool about that is that you get to you get to keep those shares until right around July 11th, unless this thing takes off and somebody calls them away early. I've had that happen to me before. But you get that premium no matter what happens, $485. So for you, you're hoping, oh man, I hope this doesn't get above $146. But if it does, then you get that upside as well, right? So you bought it at 142, and then you would sell it for 146. Right now, if it goes to 147, 148, there's a couple options you could do. One, you can roll your call for a future date. Sometimes that costs money to do. You could just let them go and just take the cash that you just made from the 142 to the 146. So, a few bucks there. Plus your 485 is always going to be with you as well. So those are some options. For me, it's not really in my budget. I mean, I have enough in my account to do maybe 2 calls, not 2 calls, 1 call of NVIDIA. And for me, that isn't really going to make a lot of sense. I'm going to let YieldMax do that for me. And hopefully it's going to generate me more than $485 a month. Something to think about, right? Because last month I didn't make a $485. So definitely something to think about if I were to do that on my own. Could I make more than what I'm doing right now at YieldMax? So That's an interesting thought. Let's go on to the next one, which is going to be. Oh, by the way, Nvidia share price $16.19 right now, 3:28 p.m. So doing okay. My average price on Nvidia, I think, is 20. Oh, I don't want to lie to you guys. I think it's like 20. It's either I can't remember if it's 23 or 27. So yeah, I'm happy to see this price go up. I would be more happy to see it go up higher and higher and higher as Nvidia goes up here. I mean, it's only up 0.76% today, and Nvidia's the same, right? 0.75. So that's pretty cool to see. Coinbase, this is an interesting one. Coinbase trading at $255, up 1.63% today. CONY itself up 2% today. That's nice. CONY hanging around here at the $8 mark. Again, this one, my average price is much higher. I think it's right around $14 on this. So I would love to see that price come up here. But I've got kind of the same thing going on here with CONY. Let me get rid of the NVIDIA one. And I'm just going to go into my folder here and open up CONY. We'll do that anytime now. There it comes. All right, perfect. So I've got CONY open here. And again, I'll zoom in on that one. So this one is a little bit easier for the first time in CONY's life. So it has one synthetic option. It's at $250. It closes actually next Friday, not this Friday, but next Friday. So $250 for the synthetics, which is up top here, and then also down below. For the synthetics, we hope that the price of the underlying is far above that to make us a lot more money, right? So far it's $5 over with roughly 8 trading days to go, give or take a couple hours there. So that's looking pretty good so far. There it goes, just pumped up another $2 while we're sitting here. Again, 250 is the synthetic, which closes in a week and 4 days from now. So that's good. What's not good is our weeklies. Again, there's the gray stuff we had talked about previously. Let's talk about the weeklies. So we have one closing this Friday. Most of these are yeah, what's the date? Yeah, all of these are closing this Friday. So 255. I've got it highlighted in red because right now the price of Coinbase is over top at 255. Then down below we got 262, 265, and 275, which is it's great. I love having these higher scattered calls, weekly calls. I think it's a very smart strategy. Down below though, we have our credit call spreads, and they're way up there. So what they're trying to hope for is that the price of the underlying, if it takes off, then we're going to have the upside, and we can take it from $8.06 to $9. Let's hope, right? But I think these are too high. Do we really realistically think Coinbase is going to jump $30 this week? For me, I don't think that's true. I think these are far too high. But that's why they're the professionals, and I'm sitting here working a 9-to-5 job that I'm trying to retire from as quickly as possible. So the income from the weekly calls was 13,129,785. That excludes, is not including the output to create these credit call spreads, which is right here. So we brought in a whole bunch of money to make the calls, the weekly calls, but then we had to put out money to do the credit call spreads. For me, it's a no. I'm not into it. I actually would prefer, you know what I would like? If they did these calls and they just kept scattering. They took that money that they put out and they kept scattering up, right? Why not do a 280, then a 282, a 287, and a 295 on the calls? You wouldn't make as much premium, but you still would make some premium. That's kind of something that I would love to see. The next thing I wanted to look at was this cash right here. So they have cash on hand. The reason they have so much cash on hand is because they need money to close these options if things take off. But something that they've been doing recently is buying a couple of days before the end of the week. And I love that, right? So if you see the price is just kind of hanging out and you have some excess cash sitting there, write some calls for the remainder of the week. These are really, really good moves because then they're generating even more income for us, which I really, really love. So that's Coinbase. Again, let's go back up top here. We want the price to stay under 255 this week, if possible. But right now, I mean, it just popped up right in front of us, right? 257, up $2 as we were sitting here. But the week is young. The week is young. CONY itself, $8.07. For me, I want to be greedy. I want this thing to go up and up and up and up. I want my share value up, and I want my distributions to be lucrative at the same time. Oh, my cake and my pudding too. I've also taken a screenshot of Coin, and I'll bring it up top here. It's options play, which I mean, personally, I like looking at the stuff because I think it's interesting to look at. I don't know if you guys are the same way or not as me. Try and make this a little bit bigger here so you can see it. I think that's pretty good. So if you had a bought Coinbase, let's say today at short-term memory last year, 257, that's going to cost you a pretty penny to do, right? For me, it's definitely outside of my budget. 100% that's out of my budget. But let's say it wasn't outside of your budget. You could totally do that, right? Now, what you can do is you can sell that call at $270 right here. That would bring in $10.15 per share, up to 100 if you had only one call on it. So 10, 15, multiply that by 100 shares or one call brings you in $1,015 a month. That's because I've set it for July 11th. Now you can mess around with all of these, obviously, to take a look to see what kind of income. So in order to get 100 shares, you would have to pay 257. Let's just call it 257, okay? Multiply that by $100 or 100 shares. That would be $25,000 in down payment, if you will, right, to buy the shares. There's also wheel strategies. I know there's so many different strategies out there. I'm just talking about covered calls right now. And if you divided that by, let's just call it 1,015 a month, that would take you 25 months to recuperate your money. Can you make that back quicker with YieldMax? I'm not too sure. I know in the past we did, right? You definitely did. In the last year, you made your money back if you were in it a year ago. So that's good. But yeah, I mean, it's just options, right? So what is the easier way? For me, it's YieldMax. What's the more lucrative way? It's tough to say. I mean, obviously, if you're in on the underlying, you get to experience a lot more of the volatility here, but you also get to experience a lot more of the ups in share price over its time out there, right? So Coinbase, maybe not a good example here, but I think that's just interesting stuff. CONY itself, 807. Let's get that price up. Let's make it happen, world. Okay, I have one more, and that's going to be our crowd favorite. It's going to be Mr. MicroStrategy, $394. I had a huge day, up 5.29% today. And I don't know if that's going to bode well for, I'll get rid of the Coinbase stuff here. Yeah, sure, save it. I don't know if it's going to bode well for our covered call strategy over at YieldMax. Zooming in, 393 right now. Now, they did something bizarre over here. They kind of messed with me a little bit. They formatted it a little different, so they put all their calls and puts together. And then same with down at the bottom here. Usually they go ahead and they kind of separate all of these, but they put the 370s all beside each other. And then another one down at the very bottom here. Just tomfoolery happening on the spreadsheet. So this first one is 390. It's closing next Friday at 390 bucks. Shares 34,440. Short-term memory again. What is it? 393. Okay, so we're looking pretty decent with this one. It's pretty close, right? But we hope that Mr. keeps going up just a little bit to give us even more income. They also have two other ones for July 11th at $370. So right now that's looking good. And then there's another one July 18th at $370 there too. So that's also looking good. Let's see if Mr. can maintain its price. I know Mr. Michael Saylor went and bought just over 1,000 more Bitcoin over the last couple of days here. Gray stuff, Treasury, we talked about it. Red stuff means that these are our weekly calls. I've got all of these highlighted. Anything with a minus sign next to it is our weekly calls. Anything without a minus sign would be credit call spreads. And look at this. There are no credit call spreads here this week from Mr. They have scattered it pretty good, pretty well here too, which I like. But you can see the very first call is $385. But again, Mr's strike price or Mr's price right now is $393. So this is quite a bit under that. So We want Mister's price to be underneath 385 this week to be able to maximize the profit on the weekly calls. But because it's over right now, not looking good for anything in red right now. Um, let's go now. What is it? 393. So all four of these right here are underwater already, and today's Monday, right? So we still have a few days to go. Super volatile stock, so who knows what's going to happen with it. I also have the stuff down here in green. They have less shares in these as they go further out of the money because they become less lucrative. So this week is the type of week I hope that they take some of that cash. Here it is right here, by the way. Let me just put a dollar sign next to it, and I'll probably have to expand this over even further. Holy smokes, look at the cash on these people, right? Is that 1,193,000? No, 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 no. I can't even read that many zeros. That's a lot of money sitting right there in cash. The reason it's in cash, look at all this stuff in red here. They're gonna, if let's fast forward, let's pretend today's Thursday or Friday, they're gonna have to close these and they're gonna have to pay a lot of money to close them. So yes, we did get money in, but we may have to put a lot of money out to close these as well, right? So that's why they have all this cash sitting here. Now, what they can do with some of the cash is buy some calls midway through the week just to generate a little bit of income. I think that would be really, really awesome for them to do that. I do have some other numbers here. Let me just kind of bring this backwards. Can we see that? Yeah, so I have the weekly calls sitting here. I've added up all of those columns. So $6 million, so 6,191,629 bucks 68 cents was their weekly calls. That's how much they generated from all of this sitting right here. And actually, these are the numbers right here that I'm highlighting. So they've generated all that 6 mil. Let's call it 6 mil. But we know that they may have to pay out a little bit, so it might not be a full 6 mil that we're going to get here. I also recorded their synthetic numbers here, but we'll leave that one to another day. Let's take a look to see if we were able to do this ourselves, what would happen. I'll bring up the Mr. page here. I'll also bring up the share price right now again for you. 393. Here's the Mr. Covered Calls that I just screenshotted, by the way, just right before I took this video. So it is pretty accurate. So if you were to buy 100 shares at $393, let's go find out how much that would cost. I don't know how many of you guys have this kind of money hanging around. 393 times 100, looking at $39,300 to buy 100 shares of Mr. right now. And if you were to do that, let's say you set a strike price at $410 sitting here, you would get a premium, which would be $17.95. Now, I keep going with the low one. That's the bid. People are asking for more, obviously, so you could probably get somewhere in between there, depending on the volatility and the amount of people buying and selling and that sort of thing. But I just go with the low ballpark. You can, if you want to go high, you go high. But let's go 1795 times 100. Right, so you would make $1,795 a month if you did your own call on this. You would be putting out, how much was it? 39,000. Let's just call it 300 divided by 1795. It would take you 21 months to recoup your initial investment if you were to do this yourself. So past performance is not future behaviors, but MSTY has paid out over $38 in distribution since it's come out, which was February of last year. So for me, I like to keep it simple. I don't have 39 grand hanging around to risk that. So you might, but I don't. And so that's why, it's part of the reason why the allure of YieldMax is out there for people like me who can afford to pay $21 a share to get a little piece of that distribution pie. Again, not advice, just something that's, that's the reason that I'm in it, is because it's more affordable for me to be able to do that. I still want to buy some of the underlying. I've already done it with Nvidia, buying those 10 shares, 26 at one point. I do want to buy Coinbase, and I am contemplating buying 1 or 2 or 3 shares of Mister. It might just take me a little while to kind of put the funds together to make that happen. I don't know how you guys feel about that, but I think it's good if you believe in the company to buy into the company a little bit. Um, Even though I feel like it's a pretty high price, but as Bitcoin goes up, should Mister go up? That's what you would think, right? So that's my thoughts on everything. That's what I do every week just for fun. I look at that chart just to kind of get a ballpark idea of where the prices of the underlying need to be. It's kind of like I'm rooting for them, but in a sense, I'm not rooting for them at the same time. So when good news comes out, that's great. But when bad news comes out, that also is not bad, right? For the weekly calls. So we'll pay attention to that for the rest of the week. It could be a pretty volatile week with Trump and Chinese president talking through a third party with LA riots, with wars in Ukraine, with global famine. What else is going on with the girls fighting? It's extremely volatile times. For me, I am putting a little bit of cash away, a little bit of cash away, just in case things happen. I want to be prepared to buy a dip because I like to eat my chips with dip. And if this market dips, I want to eat. I'm going to leave it right there. My name is Mike. If you enjoyed the video, hit the like, subscribe, and you want to become a member, I'd love to have you. I can't wait to talk to you again another time. Let's do it. Thanks for tuning in. This is Mike. This is Health and Wealth. You're awesome. Bye for now.